In this video, we're going to look at using moving averages on the MT4 trading platform. Moving averages are one of the simplest and most commonly used tools of technical analysis. Once you've opened the relevant chart, there are a couple of ways you can add the moving average indicator. One is to click on the indicators icon at the top of the screen. If you've used the moving average indicator recently, it will appear in this group at the top. If you haven't used it recently, then come down to the trend grouping and you'll find the moving average in here. The other way is to open the indicators folder in the navigator window. Then scroll down until you find the moving average. Then you can either double click on it or drag it and drop it onto the chart. Once you do this, you can change various parameters. The period determines the length of the moving average, while the shift allows you to shift the moving average forwards or backwards in time. On the MT4 platform, you can select from 4 different types of moving average. These are the simple moving average, the exponential moving average, smoothed moving average, and the linear weighted moving average. You can learn more about each type of moving average by clicking on Help back in the main menu, then selecting Help Topics, coming over to the menu on the side and selecting Analytics, and then Technical Indicators, and then Moving Average. You can then scroll down through this information to find out how each type of indicator is calculated. Although moving averages are typically applied to the closing price, MT4 allows you to choose whether to use the close, open, high or low, or a combination of these, such as the median price, the typical price, and the weighted close. You can also change the color of your moving average indicator, the style of line, and the weight of the moving average line. A long-term moving average, such as the 200 period moving average on this daily chart of euro-dollar, is often used as an indicator of the long-term underlying trend. As you can see, the euro-dollar sat above the 200-day moving average for the best part of 2 years between 2006 and 2008 before breaking decisively lower. Now we've shifted the chart forward in time to the present day. We're going to add another moving average here. Let's make it a 55-day moving average, and we'll make it blue instead of red. Now you can see that this shorter term moving average is more useful for determining the shorter term trends. It also highlights the fact that moving averages are useful when markets are trending, but when prices chop sideways and consolidate, the moving average by its very nature will tend to gravitate toward the middle of the range. The simplest method of using a single moving average as a trading signal is to buy when prices move above the moving average and sell when prices drop below. A more advanced technique involves using 2 moving averages and buying when the faster moving average crosses above the slower one, and selling when the faster moving average crosses below the slower one. Some traders take this a step further and use 3 moving averages. So now we'll add a third moving average. Let's make it a 20 period moving average, and we'll change the color again. Now with 3 moving averages, new longs are established when the mid-length moving average crosses above the slowest moving average at this point here. The exit signal for these longs is given when the fastest moving average drops below the mid-length moving average. Similarly, new shorts are established when the mid-length moving average crosses below the slowest moving average. The exit signal for shorts is given when the fastest moving average crosses above the mid-length moving average. You may need to experiment with different combinations of moving average periods to find the group that works well for you. Well, we hope that you have enjoyed this video on moving averages. If you have any questions about this topic, please don't hesitate to contact our Global Trade Support team. They are standing by 24 hours a day whilst ever the market is open, ready to take your calls, answer your emails, and help you out in any way that they can.